Welcome back to the ETF Inspector. It's Saturday, November 1st, a little after 7 o'clock in the morning. This video will be premiering after we do our Spaces talk at 8:30 Eastern Standard Time. So this will probably come out around 10 a.m. Eastern Standard Time. But this is my weekly recap video for my trades and holdings for my personal trading account. So I won't be going into the details of any specific ETF like ULTI or any of the Misty, anything like that. Just talking about what I'm trading in my own personal account. And as of lately, this has turned a lot more into a portfolio update than options trading. As the market moved up so much, I kind of stopped trading options for the most part. I have a handful still in play, but not quite as much. So since this is more of a me video than an ETF, I'll update you. I'm up to 5,110 subscribers on YouTube. This will be the 350th video that I'm making. If you missed it, there are two new, I made a new playlist calling them ETF inspections, like what I've done in the past with blocks or WPay. So Curve came out with KYLD and RexShares came out with ULTI. Both high income ETFs that are going to pay weekly. So if you haven't seen those videos yet, check them out on my page. They seem to be pretty popular, picking up pretty quick on the views. And then I do daily coverage for the four ETFs that are individual income funds from YieldMax that are over $1 billion in assets under management. And I do daily coverage on ULTI, LFGY, and SALTI. Okay, I'm on X as well at ETF_Inspector1, around 1,700 followers on there. So trying to catch that up to YouTube and doing through things like these Spaces talks. So we will be, if you didn't catch the live version, you can go ahead back and go to Ambassador of Quan. He's going to be the host, and we will be, this is not the one. This was talking with Mr. Michael Coe. It'll be this right here. So you can go back to this page after the fact and still listen to it. We're going to be talking through ULTI and KYLD with ETF Delta and Max Convexity. There may even be one of the portfolio managers joining us. So might be an interesting way to get some information on those new releases and see if there's something you're interested in investing in. Okay, so let's go ahead and take a look at what I have going on. First, I have two wheel strategies that are still in play, but I've got a longer term call sold than what I like. It kind of has taken the fun out of it. I like to sell weekly options, calls or puts, but in this case on BITO, it's a ProShares Bitcoin ETF. I went ahead, I decided, because they pay a decent distribution monthly, so I got assigned on these back in September. I received the October distribution, getting ready to receive the November one here in about a week. I guess it'll come on Friday. So I sold calls on it, or a call, at a $20 strike while the price was at 18. So it was well out of the money, 9% out of the money. Wasn't looking to get assigned yet. I received 46 cents per share, or $46 on 100 shares, which comes in an option contract. And the current price, if I wanted to close that out, if I wanted to buy to close it out, I'd pay 30 cents. That would lock in 16 cents of profit. But I'm going to go ahead and let that ride, collect the November distribution and most likely the December distribution as well, and then I'll reevaluate. So at that point, I may close this out and sell a closer to the money call to go ahead and get assigned and collect more premium. So the spreadsheet I've got here, if you do not have any shares, if you're in that stage of the wheel, this formula would equal the profit or loss. But if you do have shares, then the formula equals your cost basis. So right now, my cost basis is $16.14. So that's basically $16.14 on 100 shares based on all the premiums I've collected. So with the share price at 1808, I'm definitely doing just fine with a cost basis of 1614. I'm profitable for the year on these guys. I just started trading them in May, and I don't do it very often. So I was only picking and choosing when I liked the price, and then I kind of got caught with my hand in the cookie jar, got assigned, but that's okay. That's all part of the wheel. So that's the update for BITO. So no action was taken this week. Just catching you up. These were sold back on 10/23, so the previous week, and they expire the end of the year. So it'll just be an update on basically the cost to close that out, or if I happen to make a move, or next week should be getting a distribution from them. Next up, another update. My wheel strategy on Cormedics. Now, this is one I've traded this company. Now, this is just options wheel, but I've bought and sold shares of this company for many years. So I currently was assigned cash secured puts with $11 strike price back on October 17th. And then I sold both of them. So that was two separate. So it's 200 contracts. And on the 20th of October, I sold $12 calls. So if I got assigned at 11 and I'd already collected premium to get there, cost basis below that, and then selling $12 calls brought in $1.12 per share on 200 shares. So after the fees, I brought in $222. Cormedics is currently sitting at 11.13, so these are not close to getting assigned. They expire on November 21st, and if I wanted to close them out right now, they'd be 70 cents per share, so I could lock in 42 cents per share of premium on each of those. But I'm going to go ahead and let that ride too. There's still a lot of time to go, a lot of premium to collect. They're not in the money right now, so these will quickly move towards zero to get to keep the money, or if it does go up over 12, I'll let them get assigned. We'll play it by ear depending on how close to 12 and how close to the expiration date it is. But so this one I've collected so much premium on that even though I own shares, I'm positive 11.96, which means basically my cost basis on these is free, and I'm in up $11 even with having free shares. So I've done well trading Cormedics. Okay, this was really the only options action that I had this week, and it really wasn't much of anything. So the last couple of weeks I had an open put spread on Open Door, and I had rolled it down the previous week. So then we talked about it 2 weeks ago when I sold the rolled version on the 17th. I collected 53 cents per share on the spread, and all I did was close out the spread on this past Friday for a penny. So I got to lock in. So it was 53 cents per share minus fees, and then I had to pay another 2-cent fee on the closeout. But all in all, out of that, 53 possible dollars, I got to keep $50.64 on that one. Now I am still negative on spreads this year. This is something I just started. I never traded spreads before this year. So the first one was February 11th, and I got my butt kicked fairly early on. I did well the first couple, then I started getting nailed with some bigger losses on the spreads instead of closing them out. And so as you can see, I've got more greens than red, but the reds that went bad are much worse than the green wins. So they've got me in the negative. At one point, I was trying to get back to positive by the end of the year, but when I was trying to force that, that's when I got nailed. Actually, I literally hit break even on this trade and then lost 332 on the very next one. So if I'd have left it alone, I could have broke even. But okay, so that's it. I now don't have any spreads open. I won the Open Door spread was a victory, but it was a small one. But it's also a small dollar stock, $7 a share. Okay, and now this is more of the meat of everything, because I know the market has pulled back recently, but I once it was running up so much, I didn't want to keep chasing stocks up, selling puts below them because I thought that they could drop back, give some back, and I don't want to get assigned at high strike prices. So I started buying a lot more of these high yield ETFs. And then the market started pulling back to where I could be trading options, but that's okay. I like this. If you watched last week's video, it was more of like a moving forward type of I don't know how to say it. Like the goal, the plan. I'm talk about it in this video right here. It's a second full month payment as a monetized YouTube content creator, plus like my plan going forward. So what I talk about, I set up. I didn't mean to open that. I set up a plan, right? If this looks familiar, I don't know I just wanted to show differences. That's why I've got the colors, just to break things down. And so I've set up a plan to basically have roughly $72,000 invested across 6 smaller categories: high implied volatility, fund of funds, crypto, yield boosts, chips and AI, and then safe. And so I have started buying the first 5. I haven't started buying into the safe category yet, and I also am not sold on these 3 names, definitely being the safe. But everything else I have started buying, but obviously not at much smaller amounts. I've cashed out my old pension plan from my old job. I didn't work there long enough to really earn a significant pension to retire off of. After taxes, I'm going to get something like $50,000, taxes and fees. So I'm going to add that to the 20-some thousand that's already in here and make this work. And so if you want to see more details on that, go back and watch the previous video. But the goal for this is to try to cover the majority of my bills on a monthly basis using these high income funds. And so more to come on that. So obviously I don't have anywhere near the amount of money in these to start making that chunk. Other than Ulti, I've pretty much got all the money to fill the high IV category. Okay, so before we get into, we'll slide over. Okay, so we've got, I keep a tracker for each of these different high yield funds. And then I just enter what my distributions were for each week, and then all the formulas work together. So I'll kind of bounce around. I no longer have YMAG. That's why the rest of the calendar is grayed out. Ulti this week paid me $201.40, bringing my month end to $974 from Ulti. WPay, I got my first payment from WPay. I only have a handful of shares, so I received $3.13. YMAX, I received $48.48. So we did receive 5 payments here in October for these Thursday payers from YMAX or from YieldMax. So I'm in total $194.78 from YMAX. Chippy, I received my 4th payment. For Chippy, $11.59, very similar to the previous, totaling my month for them for $37.76. Misty, I received a 3rd payment for them this month, $356.36 overall for the month, $70.23 this week. Blocks, I've again starting to accumulate some shares, not a lot. $7.84 was this week's payment, $18.23 is the total for the month. GPTY, so I really like GPTY and Chippy, so I'm kind of excited to get more money into them when the check comes. But I received $8.14, actually smaller than the previous week. $28.08 is the total for the month. Now I feel like I missed. I think I missed Chippy. Chippy paid $11.59. No, I must have talked about it. Practically the same, $37.76. Next, we're getting into the yield boosts from Granite shares. Again, I don't have very many shares in these yet either, so these are small amounts, but these will grow very nicely once I get thousands of dollars invested into them. So NVYY for NVIDIA, 1101 this week, 2288 for the month. PLYY for Palantir, 1114 for the week, 2341 for the month. SMYY is for SMCI, Super Microcomputers, paying 1624 this week, 3503 for the month. And I just started adding some LFGY, not a lot yet. So 411 was the payment. It's the first one that I got. All right, so that's everything over here. So when we total all of that up, all right, we got a formula here, plus the month-end cash distribution from Fidelity of $977. I received a total of $403.08 for the week in distributions. Okay, trading-wise, like I said, it was kind of boring week. All I did was closed out the open put spread, and it cost me $1.02, leaving my weekend, end of the week, total at $402.06. Okay, when I scroll over, I've updated my share counts, my cost bases, and the current price. That helps fill out the rest of the chart. So I am up to 2,375 shares of Ulti. Anything in yellow means this week I bought shares of it. My cost basis is 588. Now they are at 496, so that's a little painful. I have lost $2,185 in capital value of my Ulti shares so far, and I have received $2,933 in distributions from them. So as you can see, I'm still positive by, what's that, about $750. So that's why you got to not just look at the share price. The distributions have outweighed it, at least for me. It's all going to depend. If you bought in at the height of the hype, then you're probably not doing as well. YMAX, I added some shares. I'm up to 260. My cost basis is $13.44. The closing price on Friday, $12.14. I didn't mention it, but this is the percentage current allocation. That's going to obviously start to level out a little bit based on once I get all the money invested into all these different ones. Currently have $3,100 worth of $3,100 of current investment. So that's going to go based on the current price. That's the value. If I were to like close the position out, I've lost $338 in value. No loss is ever realized until you sell. So this is just on paper. And I've received $820 in distributions from YMAX. So I'm doing just fine percentage-wise on them as well. Misty, I have 365 shares at an $18.18 cost basis. That's pretty ugly with a $10.89 closing price. I am currently down $2,600 in capital and only been paid out $1,300 in distributions. So I am absolutely upside down on Misty. Next we have Chippy from YieldMax as well. My cost base is $57.03, current price of $59.30. I have 25 shares. So it's actually increased in value by $56 plus paid me $37 in distributions so far. So they're a new addition this month, as well as GPTY, same thing, 25 shares. Cost basis of $47.23, current price $48.98. So I have increased in value by $43 and been paid out $28. Blocks is another new exciting one. Excited to get more into them. They pay a 36% annual yield, so there's not a lot of guessing and play. And if they make more than 36, then the rest just builds up the strike price or the share price. My cost basis is $25.60. They're sitting at $25.23. So I am down $18 and I've been paid $18. So I'm at break even on blocks. SMYY, 30. These are the yield boost funds. I've got 35 shares. Cost basis of $24.83. Current price of $23.04. So I'm down $62 and I've been paid $35. So I'm currently down a little bit on them. No big deal. They're brand new. I haven't had the chance. I mean, I've only got a few $100s in each of these, and they're going to each end up with about $4,000 in them once all the money gets put in play. PLYY 25 shares with a cost basis of $23.86 and a current price of $24.50 for them, up $17 plus been paid $23 in distributions. NVYY 25 shares again, $23.58 cost basis, $23.83 current price, up $6 plus been paid $22. LFGY, I've got a real nice cost basis on them. We've been chatting in the live chats and some people were jealous, but I only have 10 shares, so it's not that big a deal. So LFGY will be in a fund with Blocks and Misty. So Misty already has it's just about 4,000 in it. Blocks still needs to get almost 3,000, and LFGY needs almost the full 4,000 before that. I don't even know what to call it. That money pile will be filled. I'm up $9.50 on capital, and I've been paid $4.11. Nothing exciting. And WPay, I've got a real nice cost basis on them, but I've only got 5 shares, so I'd still need to put a lot more into them. WPay sits in a fund of fund categories with YMAX, so they're going to get 6,000 each to be a 12,000 category. So YMAX has currently only got about 3,000, so it's going to get about that much again, whereas WPay still has almost the full 6,000 to get invested. So I am hoping I get a low price once the money comes in to buy them. They're currently sitting at $53.86. I'm up $15 in capital and $3 in distributions. Everything grayed out are things that I used to have and no longer have, and I just have the distributions that I received from them. They weren't cutting it compared to what's going on here, so that's why I switched to more higher yields. Now for the month, I received $1,688 in distributions, and the month is over. Right, today's November 1st, so this is perfect. I got the full month in, and so far this year, I've received $6,677. My trading account is currently valued at about $29,500. So that difference between money invested in all of these and that are the money in the Cormedics, the 200 shares with the calls sold on them, and BITO, the 100 shares with the call sold against it. All right, so I think that's everything for this video. So I'll definitely hit this again once the check comes in and I get to start buying shares. I can't decide once the money comes in, do I just go ahead and slam it in there and start the distributions, or do I kind of slowly trickle it in to buy at different prices? I've heard cases for both ways, so not sure what I'm going to do. And if you want to, I won't go through all these, but if you want to compare your bills to my bills, see where we stand. Usually people say I'm lucky on that mortgage, $1,433. Now that does not include taxes and homeowners insurance. That's why property taxes and homeowners insurance are separate. So that's about all I got for you. So thank you for watching. Appreciate all the feedback. Obviously, I didn't have very many exciting trades to talk about. There's been times where I've had leaps and poor man's covered calls and all kinds of fun stuff. So when markets ran up, it got a little too much for me. I didn't want to follow it. So I do enjoy options trading more though. So I am excited when that check comes in. There will be a little bit of extra thousands to get some more options playing back in the mix. So. All right, I got a dad joke to end the video, and then we'll get you out of here. So why do peppers make such good archers? Because they have an arrow. All right, thanks for watching. Have a good day. Catch you in the next video.